Dominic Chu here with today's options update and your top options headlines. First off, look to Australia. Why? Because commodities entered a bear market last week. They're trying to claw their way back out of it, but that negative sentiment is driving up the cost of protecting against a drop in those Australian stocks there. Bearish put options on the benchmark S&P ASX 200 stock index reached a 14-month high versus bullish call options as traders worry about slowing economic growth. And turning to the NASDAQ 100, that index has been outperforming the S&P 500 all year, but if you're worried about volatility in the coming days, you may want to use options on the ETF that tracks the NASDAQ 100. That's the QQQ. That's what BMO is recommending. They say buy the July $64 call options on the QQQ for upside exposure, or buy 61.57 put spreads to hedge the downside risk there. And now for our top option story today. If you're feeling like the markets have been on a roller coaster ride over the past few weeks, you're not the only one out there. But the wild rides may just be beginning here. It might be up, it may be down, but here are how some traders are handicapping it. And for that, we're here with John Netto, the president of M3 Capital, to get his take on what's going on in the marketplace right now. And you know, we've got a huge amount of stuff, data coming out over the course of the next week. So just what should traders be watching right now?
Well, first of all, when looking at next week's data, we need to understand the market price today and the context behind that the market price action. How was the market positioned today? We had a number of large global macro funds out there positioned today as they have been for the last 3 months, and that is short the euro. So you take quarter in today, you take a surprise news release out of the EU summit, and it created this potential for this huge move to the upside. So now that with this huge move to the upside, we have the Chinese PMI coming out Saturday night. We also have the ECB decision on Thursday, and we have non-farm payrolls next Friday. All of these present tremendous opportunity. And for me, as an options trader, I actually think there's reasons to be long this market and short this market, and we want to structure our options accordingly.
So you don't think that the decision out of the EU here to provide this short-term fix to allow bailout funds to be used to go directly to recapitalize banks in Spain, none of this is a real game changer? You think that there's still volatility left in the mix here?
It perpetuates a market that's been relatively range-bound over the last year. A market that goes through periods of risk aversion and risk appetite. And within that regard, it's a very short, gamma-friendly market right now.
So overall, you say 3 big events over 3 big regions: in Asia with China's PMI, in Europe with the ECB rate decision, and in the U.S. with non-farm payrolls. Is there any one event that you think could be a real driving force for what happens in action next week?
I think the ECB rate decision is going to say a lot about risk assets. I think the ECB comes out and cuts 50 basis points next week. I think given the EU summit that we have right now, there's some people expecting 25. I think 50 happens. That rate differential will, I think, have a moderate impact on the euro, but will actually help assets like gold, silver, crude. We can see crude at 85. We can see gold up near 16.25. We can see silver back at 27.50.
So you think it's bullish overall? They cut maybe 50 basis points. Risk assets go up here. So what exactly? How are you playing this right now? What's your strategy in the options market?
I'm actually, because I'm short gamma, I'm short a strangle on crude. So short the 85 call, short the 80 put. That gives me a break even about 77, about 87 for the upside. I'm also short the euro 127.50, 130 call spread. And if you look at the portfolio metrics of how that's constructed, that lets me trade in this range. But if we do head down, I can use the premium from that call spread to help offset some of the downside from the crude puts that I sold.
So you're thinking sell the euro call spread there for your strategy there. So guys, if you look at the overall picture for what's happening in Europe, in China, in the U.S. next week, the strategy, the takeaway here today is sell those euro call spreads. That's what John Netto at M3 Capital is doing, and that's today's options update. So that's not it, though. On Lunch Money, Stephanie, what are you watching here?
Well, Dom, when we come back, our Lunch Money snack